right, Heaven. So we're back for the Q&A. What questions are we going over today?
Yes, sir. So the first one, we're going to talk a little bit about long-term investing and how to kind of adjust the M1 finance account. This question was from Callum. He got into J&J in his long-term stock SPY. It was hitting all-time highs. He hasn't rebalanced anything yet, but basically he wants to lower the allocation to about 1%. So what he's asking is, does that mean that when he's lowering the allocation of his deposits to 1% in that particular name, or completely rebalancing the name so that it only takes up 1% of the pie?
All right, so you can see my screen, right?
Yes.
Okay. All right, so we're going to, for just to, again, I don't know his exact situation, but we're going to just assume that he has 10% in J&J at M1. And that he's been doing this for the last year. So for the last year, every single week, money's coming in and he's buying J&J, all over the place. He's, and we're going to say he's got an average price somewhere in the middle of this range. We're going to just call it, 170 or 170. We'll call it the middle of this range. So he's been buying it 10% every week for a year. And now it's at the retest and it's broken the retest. And this is now when he wants to lower the allocation. So now I don't think he doesn't necessarily need to lower it down to 1%. I think that's pretty aggressive, because the fact that it's now taken out new all-time highs, it's more likely going to drift higher. It would make sense to definitely take some profits, and more so take some profits if it breaks down back underneath this level of resistance. So, and I have a couple examples of what I did on my own. So if he has 10% in this name, at this point, maybe he can lower it to now 8%. And so by doing that, he'll take some profits and he won't fully be out of the name if it does want to drift higher, which in the long term, it probably will do that. In the short term, again, that's anyone's guess. But now as it starts to break down through here, maybe he can lower it again, to 6%. And then if it breaks down further, say it breaks down through this prior, more weekly low, maybe he drops it down to, 4%, or if he wants to be aggressive, down to 1%. And that's giving him, like, the stock is more telling him to lower the allocation, because now it did break out, but it's coming back under that level, that it's probably time to free up some money. And then again, it breaks down further, more confirmation that maybe it's time to really lighten up. And then if this thing was to come back and continue to trade in this range, it starts to get down to here. Okay, he can up it from 1% back to 2%. A month or two later, it's down here, 3 to 4%. And then 5 to 6%. And then when the name finally starts to work its way back up, he can slowly build back into that 10% allocation. And then again, repeat the same process. It gets back up here. Now he's back to selling it. And okay, now he's down to 9%, 8%, and so on and so forth. So he's like very broadly buying on the way up, taking profits, lowering the allocation on the way down, and then increasing it back. And that makes so it's like these big, those like market cycle like screenshots where it's like greed and fear. That like chart. That's like the very broad thing we're trying to do here. Is we're trying to buy on the way up, lighten the load on the way on the top, and lower it on the way down. Again, as he lowers the allocation, if he just goes on and hits, say 10%, he just lowers it to 9, or even lowers it to 1 and hits save. It's not going to do anything until he hits the rebalance button. So he has to adjust that allocation. So if he's lowering J&J from 10% down to 1, he now needs to put that new 9% allocation somewhere else.
Right.
That's where J&J's, and an easy way to do this is, if you're on M1, you go to your holdings and you sort your holdings high to low. So for example, if you're looking at my watch list, I'll use my names. And in this very simple example, Etsy's up 1% today, Mitch is down 4%. So this very simple example, I would be selling Mitch and adding that percent back to, I'm selling Etsy and adding back to Mitch. So for his J&J, he wants to take those profits and he needs to allocate it somewhere else and then hit rebalance. And then the next day, M1 is going to know, okay, you're lowering your allocation. We're going to sell J&J. We're going to take some profits and we're going to put the money where it's underweight.
Yeah.
So lower the allocation and then hit rebalance forward to actually, for M1 to know to actually execute. And to give a couple quick examples with him and J&J, for me and Etsy was the same thing. I had it, we're going to say I was buying it for the whole year, had this 10% allocation. Etsy is now starting to break out through that prior high, similar to where J&J is kind of right now. It continues higher. It looks amazing up here. Once it starts to come back underneath here, this is now the time where I want to lower that allocation because I gave myself all the possibilities to be right in the trade. I held through the breakout. It started to go, looked amazing. It's turning back down under that breakout. Clearly, that trend is now going to start to change. And for me, like I did this with a couple of names, and I wasn't as aggressive. So like I was at 10% here, and I lowered it to 5% here. And again, hindsight's 2020. Of course, in this example, if I did it to 1%, would have been that much better. But that wasn't the case. And you'll see the same thing here. This same thing with CRM. Again, very same chart with this J&J. All-time high, gets back up there, breaks out, looks amazing, comes back underneath that major breakout. And same thing, comes back down. That's the time we want to lower the allocation, take the profits. And now down here is back when we can start to increase it again. So now I can, up it from, if it was 5%, now I can make it 6% down here. And then in a month or two, I can, up to 20, I can up it to 7, 8 and work back 10%. And again, broadly buying the way up, taking profits as it's breaking back down to that major level. And then after the dust settles and a base starts to form, starting to increase that again. And it could be times where for J&J, if he doesn't necessarily like the name that much, and if this was just like his first nice trade in it, there's nothing wrong with just fully taking it off. You don't have the conviction. Like for me, when Teladoc finally turns around, when Bumble turns around, Mitch, like these are 3 names for me, and even Uber that, I don't have as much conviction in them as I do with a name like Etsy or Shopify, that I have no problem taking these off completely and then just removing them from the pie entirely, where the other names, I'm going to just continue to, adjust those allocations.
Yeah.
Where the stock's trading at.
Yeah. So Callum, I mean, so basically, even let's say you have that 10% J&J, if you're reducing the allocation to say 5 or 6%, it's essentially what that'll do is, let's say you're putting in $100 a week. It's going to lower how much you're putting in every week, but it's not going to sell any of your profits until you actually hit the rebalance button. So once you hit that rebalance button, because what you have is still 10%, allocation wise, but you want to rebalance it to say 6%, it's going to sell, that 4% of your position or whatever to the profit, and then move it over to another stock. Moving on, next question from Oksana. She was asking, so she's added the S&P 500 and the Dow 30 names to her watch list. How else can she find other A+ setups to add to her watch list and to trade?
So we have a bunch of watch lists. I'm not sure what stuff she's on, but towards the end, I think it's step 11, we have all the watch lists that we go over where she can import them in. But even for now, with those two, you have 530 stocks to scan from. The Dow 30 is very easy. Just in this discussion, I can kind of click through this in a minute or two to find a setup. Where obviously the S&P is going to take a little bit longer. But I think with 530 names, you will have enough names to look through to find at least some setup. If you have 5,000 stocks, read every single public company out there, it's very improbable that you're going to realistically scan through all those names every single day. We're going through this list of 30, very manageable, very repeatable, easy habit to form. And even S&P like this, could take you 15 minutes to kind of go through. There are even times where like I'll scroll through like during the day, I'll scan only the names that are up. And then once I start to get to names that are down in the day, I'll kind of just move on to obviously not looking to buy names that are down. But I think you have definitely enough with wow, ATT got smoked.
Wow. Holy shit.
It's like a weird dividend. No, it's just okay. That's weird. Like we talked earlier about avoiding telecom, and this is perfect reason. Did Verizon get smoked too? I wonder what that news was. That's big. What the hell happened?
Yeah,
Update AT&T complete. I guess there's some type of deal. AT&T is going to complete Warner deal. Interesting. All right. I guess there's just a deal getting closed. All right, Evan. So yeah, hopefully that's hopefully that kind of answers your question.
Yeah, and I mean, I would even add on to that is like if you really want to filter through some names, what I like to do is I go on FinViz.com if you want to just pull up FinViz really quickly. And then I go to Screener, which is right there. And then I will just kind of filter out certain things. So I will put, you know, a price, the price is going to be above $20. I'll do an average volume above 400K. And then I will also just have like, you know, US stocks only. And then also if you go into like the technical stuff, so yeah, if you click where it says all or technical, top right there, yep, you go to technicals, and then you can see also like moving averages. So, you know, I do simple stuff like, you know, it has to be above the 200-day, which will filter a ton of stuff. Like right now we have 201 pages. You do that, you're cut down to 69 pages. So little things like that, we'll cut it down to say from 200 pages of stocks all the way down to, you know, 30 pages usually. And then what I do is I actually click charts. You have your mouse right there, just a little further lower, right there. I'll click charts, and then I can just see everything really quickly. So this is like a really easy way to just scan, you know, 10, 15 stocks almost at the same time since they're all on one page. And then I just kind of go through every page. If there's something I like, I add it to the watch list. And I'll do this basically every weekend to see if there's anything new coming in. But there's a ton of filters here, so you kind of just, once you figure out what you like to trade, it makes it really easy to find new stuff. So yeah, 52-week new highs. You can look at recent IPOs, all that kind of stuff. So stuff that maybe isn't in the S&P 500 or the Dow 30, you might still be able to catch on FinViz.
Yeah. So I mean, it's like this. God damn it, haven't I been doing this?
Look at that, Ben. I told you, man. We learn something new every week. Every week.
Over 20, near highs, like, you know, ACC flagging near highs, ADM and avoid. But damn, this is sick. I guess I've been using FinViz in so long, but wow, that's pretty cool.
Yeah, and guess what? It costs you $0. Look at that. It's free. And I mean, if you really wanted to upgrade, because you can get a membership with them, and then what you can do is like click export, and it'll just export that entire watch list to TradingView, but not really necessary since we're not really adding all of these. But yeah, just a quick way to kind of go through some names. You see the charts right there. It's pretty nice. Cool. Next question, we got Matthew. He's asking if you have a buy stop in and the stock is gapping up above your buy stop, what happens?
You will get triggered right off the open.
Correct. So you'll get triggered right at the opening price, which could be much higher than, you know, what you were expecting. So there's two ways to kind of avoid it. The first one is to cancel your buy stop. You know, if it goes without you, it goes without you. It's okay. Move on to the next. Or, you know, keep a close eye on it. Watch for those retests. See if it kind of pulls back intraday, and then look for another opportunity to get in. I tend to just, you know, cancel the stop and just let it work. The other thing you can do is put in a buy stop limit. I know, Ben, you like to do those mostly when it's like earnings names and things like that, where like if it gaps up too high, it just won't put you in. But that buy stop limit, basically the difference between a buy stop limit and a buy stop is a buy stop is saying once the market crosses, so let's say you have a buy stop at 50.01. Once the market crosses 50.01, I want to be in. So if it opens at 52, it already passed 50.01, it's going to trigger you in at 52, and you're buying 5% higher than you were supposed to. If you put in a buy stop limit, say at 50.01 with a limit at 50.20, if it opens above 50.20, it's not going to trigger you. But if it opens at say 50.19, you'll get in at 50.19.
Yeah, pretty much. Again, if the name's gapping above your price, like Hammond said, just cancel the stop. No sense of chasing it. And the only way to really catch those big gap ups is going to be really around earnings or some random outside event, like the opposite of this T news. Like if this name, had gapped at 20%, that's when if you had the buy stop in and it gapped up to 30, you would just get kind of tipped in. But 99 out of all, or not, I won't say 99, majority of the time, you shouldn't catch that crazy gap up unless you just happen to pick like really crazy names. But there are, of course, going to be times you get ticked into names with buy stops and it doesn't go. That's kind of just a part of using those orders. But yeah, before we were talking about like that AMD, and this morning the person who wanted to buy 100 at support, like this is exactly why we don't want to buy it when it's exactly at that price, because already down 5%. Just kidding. But anyways, all right, Evan, what was the next question you want to go over?
Next question. So characteristics of a proper consolidation, because oftentimes I'm helping people through the programs and, they'll send me a chart and I'll be like, it needs more consolidation. So maybe kind of defining what does that mean exactly? What are we looking for? And then how do we trade those consolidations?
Yeah, all right. So I'm trying to, all right. So again, consolidation, you're just looking, even if you look at like the SPY, for example, we can see like this consolidation, this range that we've been trading in, this sideways action. And the more it gets defined, the longer it takes. I have to say, you have like the room on the chart. Like if we're looking at this, like, from 460 to 420, the more it can trade in this range, the longer it consolidates, the more likely one of these two things eventually going to have to eventually break up through 460, or it's going to break down through 420, or if you want to say 410. And in the beginning, when we're like super excited, like this next day, right here, people just expect, oh, it's gapping up, it's coming back to this level, it's going to break, it looks amazing, but it's just too soon, like it's too early. And that's, especially in the beginning, newer traders, they're always going to like look for, or more often than not, they're going to look for like buys here, where like it just hasn't set up enough yet. It just needs more. And we say like, it needs more time. Mm-hmm. And even now, we fast forward 2 months later, and it still needs more time. And again, this is the broader market. So anything technically with the broader market, it's always going to need more time, because it's, the entire, this entire market as a whole. But if this takes 6 months to set up and eventually through 460, that's when we're going to want to, buy up through that break. And I'm trying to find like some setups now. Like, even like recently, if you think of like LMT, this was 2 years, this name traded inside of this, and disregard these colors because they're off. But you had resistance at 400, you had support, 320, this $80 range set up for 2 years. And when we talk about like measured moves with this consolidation, like this is $80, and not wildly surprising that when it does go, that's the measured move. So the bigger the consolidation, the bigger or more defined the level is going to be. And you can see that it took 2 years to develop. So the longer these things can set up, the better it's going to be.
Yeah, and I think it also, when it comes to specific charts and setups, is you have to pay attention to the consolidation in relation to like the upward move. So we're talking specifically bull flags here. It's like if the stock went straight up for 3 months and it's consolidated for 3 days now, that's not a bull flag we want to be buying, right? That's what we call a Mickey Mouse flag. It's not something that you want to just buy, because the buying was a long time ago already. You're sort of just buying the top, and even though it can go, it probably will go higher, and it could go higher, there's a higher probability of it going lower first, and a much lower probability of it doing that same 3-month upward move without some real concrete consolidation. I had a pretty good example of this one, which was CINF.
I'm sorry, CINF?
Yeah, CINF. So somebody had mentioned this one, and I mentioned that it needs more time because they were looking to buy this flag breakout at all-time highs through 139 with the stop under 130, with stop under 134. Which risk-wise, sure, you're risking $5 or $4 on a $140 name. That's fine. However, the problem is, you're looking at the stock. The stock basically went straight up for about a month, almost 2 months. And you can see the real entry was this macro consolidation pattern. The entry was on the break of this resistance level, right? And this consolidation took almost a year. It took 10 months. So these are the areas where you really want to be buying and swinging. And then, this little flag here, you kind of want to avoid trying to buy this, or, if anything, it can kind of be an area where you might add to your position because you're already in from lower. It's, established a new higher support, so you've raised your stops. You're sort of in the money if you're buying it from that 125 area. But as a new position to buy it up here, it just, to me, it looks just like it did May of 2021, that when that consolidation originally started. So I don't want to be stuck in this name for 10 months while it's consolidating and getting shaken out in certain spots, trying to buy it back. I would much rather wait. So these charts, they have patterns. There's a reason that they consolidate certain ways, and they'll usually continue those patterns. So you really want to keep that in mind when you're looking for both flags and for setups. You don't want to just buy anything that just went up and then went sideways a little bit, because oftentimes you'll get shaken out, and you're not in at the right spots.
Again, if you just look at like visually from like consolidations, like look at how big this consolidation is. Like I've obviously drew it out, and then you can see how tiny this one is. Like this is way more significant. There's going to be way more people noticing this. There's going to be day traders trying to buy this break. There's going to be swing traders trying to buy this break. There's going to be long-term investors who can spot this setup. There's so many more people that can obviously see this just visibly, visually, than when you're zooming in as small, so much as you can. Oh, it's been, there's only a few people, a much smaller pool of people looking at this setup than the people that were watching this for, almost an entire year. So that's when you talk about like the consolidation. It's just, the bigger you can see, the bigger it is, the more obvious it is, the better it's going to be. When it gets, tighter up here, yes, the path is probably higher, but you might not get the same score as you would in these bigger consolidation areas.
Yep. And that just goes in with being disciplined and letting setups really form. As swing traders, we have to understand what our strategies are. And if we're constantly trying to find these little flags at highs, we're going to end up getting chopped up, and that doesn't end very well. So, And that was the last question, Ben.
All right. Very sweet. Oh, so one thing I did you can you share your screen and do the saving the contact thing?
I did, yeah, and I sent it to you. But if you want, we can do it right now.
Yeah, just do it really quick.
Also, are we recording this?
Yes, it
yeah,
is.
we are. It is recording. Hello world. All right, cool. Yeah, I can share my screen really quickly and get that done. Give me a sec. I think I did send it to you, but we'll do it again. It's fine. Okay. Let me share my screen. All right. Ben, can you see my screen?
Yeah.
All right, cool. So if you're getting the shakedown or the big picture and it's coming into your spam, what you want to do is just add Trading Experts as a contact in your Gmail. It's probably the same thing on Yahoo or whatever you might use, but I use Gmail, so we're going to do that. So the top right corner, you go to Google Apps. It's like those little 9 dots. You go to Contacts. And obviously, I already have Trading Experts here, but I will delete it real quickly so that it's not there. And you're just going to create a contact. You're going to call it Trading Experts. And then you're going to put the email, which is tradingexperts1@gmail.org, or is it .com?
Gmail.com, yeah.
Yeah, .com. And you're just going to click Save. And you'll see that It should, if you did the proper email, the Trading Experts logo is going to pop up and you'll see recent interactions and stuff like that. So once it's saved in your contacts, it should no longer go to your spam. If it does still go to your spam, you should be able to right click the email and just put not spam, and that will move it over. And once I did that once or twice, it never went back to spam.
If you hit the star, does it do anything?
What's that?
If you hit like that little star thing, does that do anything?
I think it'll just add it to your favorites. I think is like so I think now when the emails come up, you'll get that little star in your inbox. That way it's even easier to spot.
All right, well, thank you for that. And it's something for the other emails for like ban@tradingexperts.org or shake@tradingexperts.org.
Right.
Any of those would be kind of the same thing.
Yeah, exactly.
Send this spam folder. Raphael, I did shoot you a DM before. I was just checking to see how you do with the challenge. So if you want to answer me back later. And if you guys have any questions now, this would be the time to speak up. If not, we're all good for the day.
Yeah, and while we do that, we can just do a quick little recap. So for M1, when you're reallocating your funds, you can lower the allocation, but until you actually click rebalance, it's not going to sell what you already have in there and put it back somewhere else. The next part is adding other stocks to your watch list. If the 500 we've given you is not enough, you can go into FinViz, mess around with a little bit of the technical filters, and you can get a bunch more charts. Buy stops, if you have it and the stock is gapping up above your buy stop, cancel that because you don't want to get stuck buying much higher than you initially planned. And then the third or fourth thing was just proper consolidations. When it comes to bull flags, you want to make sure that you're looking at the upward move in comparison to the consolidation. If it went up for 3 months and it's been consolidating for 3 days, that's not a proper bull flag. You want to wait longer than that, let the stock digest the moves, and also look at previous patterns. If a stock took 10 months to consolidate to get that nice 1 month run, ideally, you should be in the mindset of looking for that pattern again. And that's that.
Well, Heaven. All right, guys. Thank you for watching, and we'll talk to you next week.
See ya.